get to our guest now. Art Price is former CEO of Husky. He joins us now. Art, it's great to see you. We're really excited to talk to you because you have a message here that's in stark contrast to a lot of people in the oil industry. We've heard that Keystone XL, we've heard it described as a blow to Canada, a blow to Alberta. Sorry, the cancelling or the blocking of that pipeline by Washington. You have a very different view. You think Keystone XL is unnecessary.
Well, if it was necessary, the producers using it and the customers of those producers would contract for capacity on that pipeline. There are almost no merchant pipelines in the North American market. So TC Energy has been trying to do the Keystone XL pipeline. Its purpose is for the oil sands oil, and its purpose is for oil sands oil that's not currently being produced. So it depends on a growth in oil sands production, and the oil industry has canceled essentially all those projects. And the existing production is handled other ways, or they would sign up for this pipeline. And same for the customer side. The refiners, both of these two people have access to billions of dollars of capital in the public markets, but none of them think it's a priority project for them. And that's because of the world supply and demand situation and outlook for oil. So it's a project the market canceled until the Alberta government stepped in to bail it out.
But wasn't TC Energy keen to go ahead with it? Had they not signed up at least some customers for Keystone XL?
Well, it looks like not enough, right? I mean, the bottom line is a pipeline is just connecting production to refiners and has no other economic purpose. So if the producers aren't willing to sign up for the pipeline and the refiners aren't willing to sign up for the pipeline, then it has no economic purpose today. So that's not saying pipelines are not good. That's saying this pipeline at this time for this purpose. I mean, it's clear that the oil markets are going through a transition. All the big guys with all the information, whether it's Chevron or Exxon or Imperial Oil or any of these major players, they have all the supply and demand information that relates to oil sands oil and oil sands consumption. And they're not signing up.
You were frustrated to see Alberta sinking more than $1 billion into this pipeline.
Well, it's actually about $6 billion of equity and loan guarantees, and the whole capital market system won't do it. And Alberta government actually hasn't got the reason to do it. I mean, it would be different if there was 1 million barrels of existing oil sands production locked in and stagnant, but that's not the case. So you're either in a market economy where the market works and you stand back from the interfering in the market. I mean, this is basically no different than the NDP when they put a whole bunch of taxpayer money into rail cars to haul oil by rail without thinking of the market actually working. This is just on a grander scale. And of course, pipelines are much better technology than rail cars, but it's uneconomic at this time. And when it is economic, the whole policy framework would have changed, will change if it's ever economic. Buyers will need it, producers will produce it, but that will be in an economic climate where it's needed.
I don't want to quibble with you, but I think you said Alberta could be on the hook for $6 billion. That sounds high. I mean, that's higher than the numbers I've seen. I know they haven't fully disclosed their exposure here.
Well, they did disclose it was $1.5 billion in equity and $6 billion in loan guarantees. So if you're guaranteeing loans and the project is dead in the water, then you're in the line for paying off debt. And nobody knows behind exactly what the numbers are now, but what it took for TC Energy to say they would proceed was the combination of the equity and the loan guarantees. And it appears that that equity in those loan guarantees are in a special purpose company, not in TC Energy itself. So it looks like it's all attached directly to only the pipeline asset. So none of us know what the actual current liability is. But all I'm saying is it made no sense to jump into this on a raw economic merits basis without getting into politics.
Can we you say no industrial player that you've spoken to is supportive of any notion of sanctions against the US over this thing?
Yeah, and when I say industry, I'm talking about Alberta industry, not just oil industry. And I'm talking about shareholders and investors in Alberta economy. Because if you're an existing oil producer and you're not in the oil sands, you're not for sanctions between Alberta and the United States. Your market is the United States. That's the existing industry. Same with the natural gas industry. Its market is the United States. And the agribusiness sector, the vast majority of its market is the United States. So the Alberta economy was built on competing in international markets. And our commerce is that today. And it makes no sense to jeopardize that over a president living up to the promise that he made, that everybody knew he made, on a project that isn't needed because that oil sands production isn't going ahead. So why have that debate in that fashion? I mean, everybody's on side. Everybody's on side with whatever your contractual relief is. Sue them, get your damages, sure, but it's not worth a trade war that backs onto all the other Alberta industry that isn't the new oil sands projects that aren't going ahead.
Keystone XL could be necessary, excuse me, in theory, if Alberta oil production went on ramping up in years to come, went from about 4 million barrels a day towards 5 million. Do you think Alberta should keep ramping up oil production?
Well, not in this climate, right? Because it's obvious that the demand, oil is a cost commodity. You are in a cost competition. And the question is Alberta's new oil, the oil we're not producing now, is it cost competitive with the global oil supply? It's not today, or it'd be in the market today. And whenever it is, those forces would look entirely different than they do today. But the idea of an Alberta government speculating on Alberta's future by betting on the oil sands speculatively with Alberta taxpayer money, as compared to all the other opportunities Alberta has, and we got a lot of them, and they include the fact that we have existing oil production. I'm not ignoring that. We have an existing market. We have an existing oil production. We have existing gas production. We have great technology opportunities to even make it cleaner and better. We have the agribusiness sector, which has been subordinated to the oil and gas sector for decades. And all of those things can be aligned with a more sustainable economy outlook, which is where the customer base actually